Good evening, everyone. Myself, Anjali Nair, on behalf of Kirin Advisors. It's pleasure to welcome you all to the Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator, co-powered by Kirin Advisors. Today marks day one of our three-day summit with a series of focused management meetings lined up. We entered the ninth interaction of the day with Patel Retail Limited. From the management team, we have with us Mr. Rahul D. Patel, the CEO. Welcome, sir. Good evening.
Hello, good evening.
And we have Mr. Hitesh Savlani, the AVP Accounts and Finance. Welcome, sir. Good evening.
Good evening.
From the Value Educator team, we have with us Mr. Praneeth. With that, now I hand over the floor to Praneeth. Over to you, Praneeth.
Thank you. Good evening, everyone. A quick introduction before we start. Patel Retail is a value-focused supermarket chain serving tier 3 cities and nearby suburban markets. The company offers a wide range of food, FMCG, general merchandise, and family apparels under the Patel's R-Mart format. Its presence is concentrated across the suburban areas of Thane and Raigad districts. With this, I conclude the company overview, and with that, I hand over the stage to Mr. Rahman, sir. Over to you, sir.
Thank you, Prandu. Thank you for giving us this opportunity. Thank you, Value Educator. Good evening, everyone. Thank you for joining us. Now, before I start with a brief about our business verticals, I want to give you a short description about Patel Retail's journey. Patel Retail's journey started back in 1990 with a small Kirana store which was inaugurated by two brothers, Mr. Dhanji Patel and Mr. Becher Patel. But their journey in retail space started way before when they started working in the Kirana store in the 80s when they worked as a delivery boy packing goods, selling. You can call them as Stepney because whenever there was a need, they had done everything. So our MD, Mr. Dhanji Patel, was always a visionary and had a zeal of being an entrepreneur, which was second to the zeal of learning. So soon in the early 2000, he observed the changes in the consumer pattern and aspirations of the consumer market, shifting from traditional Kirana store to self-service. And that's how in the year 2003, we started our first supermarket. Through the year, he was learning and understanding the local consumer and their mindset. He recognized all the people's income and spending level are increasing, but also consumer awareness is increasing in regards to the quality service, but more about the value for money. Uh, then when we focused on that's when we focused on the basket design and made sure Patel Armad had the best quality of staples and grocery at the right value. Same was recognized by a consumer, which boosted our confidence, which helped us open more store in a short span of time in the year 2007. We knew purchase was our cup of tea, but we were very conservative and picky about opening stores aggressively. But scaling and growth was important for us. That's how we ventured into export. Our export operation in the year 2007, our export operation was scaling. Looking at the future, we wanted to focus on consistency in regards to the quality. So in the year 2014, we started our first processing unit in Gujarat, Kutch, Dudai. With that processing unit, we had cracked the code of consistency and expanded our footprints into different countries across different continents. Soon, we started getting demands from the domestic vendors as well for multiple commodities. So in the year 2019, under MOFI scheme, we started agro cluster in the year 2022. We got listed in the year 2025 August. So just before I brief you about our business verticals, I want to share our journey since our listing ceremony to till date. We had prepped to open stores around 15 stores annually, from 42 stores to 55. We are already at 48 stores. We have 5 stores in line. We had planned on increasing our distribution of our private label Indian Chaska, in which we sell our blended spices. We have expanded our footprints and distribution from Mumbai to Nashik, Solapur, Latur, and Nagpur. And in Gujarat, we have started Rajkot, Surat, and Ahmedabad. And in UP, we were present in Lucknow. We have started our operations in Kanpur as well. We have started our operations in the state of Jharkhand, Bihar, Uttarakhand, and a few cities in NCR. Now, let me take you through the uh, two business verticals of Patel Retail. Our first vertical is retail. We have 48 retail store as of today across 17 locations in the MMRDA region with 2,02,600 square feet where we sell third party as well as private label. We manage more than 10,000 SKUs across 38 categories with an annual bill cut of 50 lakhs. Our retail business is operated in hub and spoke model with a cluster-based expansion strategy. Uh, we have we have private labels across three categories. We have Indian in which we sell uh, spices, ghee, and papad. We have Patel Fresh, in which we sell pulses and staples. And third, we have Patel Essentials, in which we sell home cleaning products. We also have a label Blue Nation, where we sell garments. Uh, our cost of opening each store is 1,500 rupees per square feet of capex and 2,000 rupees per square feet of inventory. Uh, so all our stores are operationally break even since day one, and it takes us about 24 months, 2 years to break even on the capex part. We have an omnipresence where our customers can shop through our app as well as WhatsApp. In future, we want to increase our digital growth by introducing quick commerce option, wherein our store would act as a dark store and scale beyond Thane, Raigad, and Palghar into western suburbs and new city in Maharashtra. We want to explore into central and western India to broaden the retail footprint, target 75 plus stores by FY27 with cluster-based approach, ensuring cost efficiency. Our second business, which is manufacturing business, is being conducted from two locations, Ambernath and Dudai. Uh, our unit one is situated in Ambernath, where we clean, grade, and sort pulses and staple. It is spread across 7,600 square feet with an annual capacity of 14,400 metric ton per metric ton. Now, this unit mainly helps us to cater the of our retail business. Our unit 2 is situated in Dudhai, Kutch, where we process cumin and peanut. It is spread across 7,600 square meters. Yeah, it has an annual capacity of 45,900 metric ton per annum. Our unit 3, which is also agri cluster, where we have 5 units. It is spread across 15.9 acres. It consists of 5 units. So unit 1 is where we process whole spices. Our unit 2 is where we manufacture blended spices and powder spices. Our unit 3 is a wheat unit where we make atta, maida, suji. Our unit 4 is peanut blanch, where we do blanching of of the peanut, which is removal of the skin of the peanut. Our unit 5 is sesame unit, which is again removal of the skin of the sesame. We also have a dry warehouse of 3,000 metric ton and also cold storage of 3,000 metric ton. Uh, we uh, we also have a third unit of creative trading, which was introduced as a part of our export business to give convenience to our customers by providing them everything under one roof. But with our goodwill and experience and consistency in our quality given to our export consumers, we plan on reducing the same year on year. Uh, so this is about Patel Retail. We can start with Q&A.
Thank you, sir.
Yeah.
So participants, the floor is now open for Q&A session. Kindly raise your hand or you can drop your questions in the chat box. Sir, we have one question in the chat box. So,
Yes.
over the last year, what has been the bigger focus area for the team, driving customer demand or managing competitive pricing? And how has that influenced store performance overall?
Right. I mean, there is no one side where you can focus, right? If there's a customer demand and if you want to increase customer demand, maintain the customer demand. So it goes hand on hand. In Since last year, we have focused on both the areas equally, be it our retail space or our export space or our domestic space, where we sell our brand Indian Chaska or in export, whether it is an IPM cumin product or let's say any powdered IPM spices, or in retail, as the competition is enormous, right? You have big players like Reliance and DMart coming in. With their scalability, we have tried to manage the same terms of trade with every brand that is present in the market to give us at the same price, or let's give us the same service that has been provided to other brands as well. So I hope this answers your question.
Continuation to that, sir. At first question is at the store level, what has
Mhm.
been harder recently driving footfall or protecting margins?
Um, Protecting margin is it has been harder. I mean, footprints, you can get that through marketing, right? But at the end of the day, trying to stay EBITDA positive has been the biggest thing, the bigger thing. But we have managed that well. I mean, we have tried to sustain the same margins that we were getting earlier. If not, moving forward, even our plan is to grow the contribution of our private label sales, which was earlier at 17%, but we plan on increasing it to 22%. So even that would help us in maintaining the margins as well.
Thank you, sir. So, the second question is when you decide to open a new store, what is the one metric you track most closely in the first year to judge success?
Yeah, so I would say there is no one metric. There is two metrics which we primarily focus on. The first one obviously being the right location. It needs to be in the neighborhood, so that helps us cater uh, all the segment of people, right? Right from low income to aspiring middle income. We have always planned on being the landmark to be present in the local areas. And second thing is all from financial point of view, it's the rent. Is the rent. We have a policy about how much rent is to be paid per square feet in order to stay positive, in order to get the right margins.
So, third question is as the store network scales, at what stage does management typically start seeing meaningful operating leverage?
Sorry, can you please repeat the question?
Yes, sir. As the store network scales, at what stage does management typically start seeing meaningful operating leverage?
I just lost. Let me
So,
write down your
uh,
question. It's a long question.
am I audible?
Yeah, if you can. Yeah.
Yeah, yeah. So basically, the company start getting the operating leverage from 1 year, 1.5 years. Uh, as we have a 2000 rupees per square foot for the inventory, and 1,500 is the construction cost. So the operating leverage come from almost 1.5 years and above.
Okay, thank you, sir. Sir, we have one question. We have question from Mr. Churchit.
Hmm.
Yes, Mr. Churchit, you can go ahead and ask your question.
Hi, so am I audible?
Yes. Hi, Churchill.
Yeah, you're audible.
Hi, first of all, thanks a lot for the opportunity, sir. Just my few questions in my mind. So
Yeah.
first of all, what is our average store size and like how this trend will going like in further in FY 26 and 27?
So our average store size right now is 4,500 to 5,000 square feet. But moving forward, we want to cater all the we want to increase our categories of product. We want to increase our SKUs in regards to general merchandise. So moving forward, our strategy for the store size would be 6,000 square feet.
Great, great. So
Yeah.
like just my simple question is like which kind of target market like are we targeting? Just a sec. Like which kind of public we are targeting? Like it is middle class, upper middle class.
Uh, Lower class to upper middle class.
So like how are we, planning to compete with the big players like DMart because they have high negotiating powers, right?
Right.
With the
Like I
suppliers.
told you, sir, we have same terms of trade like DMart has with the brands, right? And given that our store location and our basket design is a key factor, right? I mean, we have a when I say about our basket design, you would find different SKUs as at different locality, which you wouldn't find in DMart. Let's say a store in Ulhasnagar would have a different SKU in Papad, whereas in Dombivli it would be different. Let's say in Kalyan there is a store which has high density of South Indian people. You would find the quality of rice being very different than the quality of rice that you would find in Ambernath. So we have understood our consumers based on their locality, and we have built a basket design that way. And another factor which helps us compete with DMart is the ease of shopping, right? Our stores are located right outside your building, or it would be at a walkable distance, whereas in DMart you would have to take down a trip of like 2 3 kilometers to do shopping. At least in our region, that's the case, right? They have always been in the highway to get that kind of
Un-
space. Yeah.
Understood, sir. Sir, like one more thing. What is our average ticket size?
Average ticket size right now comes anywhere under 850 to 900.
8 to 900.
Yeah.
Okay. And like if you can just give me the, ballpark footfall if possible.
Ballpark footfall per day, 5 to 600.
5 to 600. Great.
Obviously, it changes throughout the month because in the first 10 days you would see more than that because it's usually salary time, right? So people come.
Correct.
There's a high volume that you experience, but if I calculate on an average, it's 500 to 600.
Great.
Yeah.
And so, like on the storefront, like if I open a store today, so how long it will take us to for that store to get matured? Like it
Uh,
will from there on it will move like just stagnantly.
2 years, 2 years, 2 years.
And like are we having all these stores are leased or like we have own model as well?
Few stores are owned, most of them are leased.
Can you just quantify if possible?
I think four stores are owned and the rest of them are leased.
Okay, sir. Great,
Yeah.
great. That's it from my side. Thank you.
Thank you. Thank you, Chachi.
Thank you, sir. So we have next question from Mr. Ayush Shah. Yes, Mr. Ayush, you can go ahead and ask your question.
Hi, sir. Am I audible?
Yes. Hi, Ayush. Yes.
Thank you for the opportunity. So my first question is regarding the store. So going forward, if I talk about the 3 4 years or 5 years down the line, How much stores can we expect?
We plan on growing to 12 to 15 store every year. So according to that, if you calculate for the next 5 years, it would come down to more over 8,500 stores.
And my sir, second question is there any location or where you have to compete with the DMart or within the 1 kilometer radius, your
Yeah,
store and DMart store collide?
plenty of stores are like that.
And
We have
how that particular store is performing, sir?
See, we are present long before than DMart was. So we have that kind of goodwill, but obviously, with the brand name of DMart, it obviously hurts a few months. But eventually, within a year and a half, we kind of see the same revenue that we were seeing before DMart was there. Obviously, it hurts us for good 6 to 8 months because even consumers want to try, want to experience the convenience, the service, right? So we typically see a downfall for 6 to 8 months, and then eventually we get back to our normal revenue for that store.
And my sir, next question is regarding the growth. Sir, after 23, we can barely see a growth rate from in the company. Even the demand being that much large scale is growing more than us, and even our base is very small. We can't even match the growth rate of demand.
Yeah.
So, sir, that your opinion on this?
So see, from in the year 2023, if you would see our revenue from operations through our different business verticals, export was more dominant. So in that year, we did export of sugar, which counted for around 300 crores, 300, 350 crores. And in the following year, the sugar got banned, right, by the government. So that's why you have been seeing that downfall, right? And with that, even we took a cautious call that we don't want to do trading and we don't want to be dependent on this trading segment. We need to build our own brand. We need to specialize in our own products. So in the next 2 years, you'll be seeing a substantial growth in the revenue from domestic market, right? So I wouldn't say see the retail has been growing at a 15 to at a 12 to 15% CAGR. So I wouldn't say that there was no growth in the retail space. Our export business got shrink because we shifted our focus from export to domestic. With that being said, we still do export business in more than 35 countries. We just have filtered where we want to do business, right? And how we want to do business.
So, sir, from this, can I conclude that going forward, we're gonna focus on more on retail and processing business and less on the trading business?
No, see, one thing is for sure, we are not going to focus on trading business. When it comes to retail and our manufacturing business, we have enough human assets to kind of manage uh, growth for both the segments at the same level. So at any given point, even moving forward, you would see 50-50, or let's say 48-52, or 45-55, that kind of share.
And sir, main trade receivable is from only from the manufacturing segment, I guess, not from the retail segment.
Yeah,
Whatever the
right.
trade receivables are there.
Well, Hitesh, do you want to explain this?
Yeah, so sir, basically the trade receivable side is from the export side, as our transit period is almost 2 to 3 months. So the receivables are majorly pertains to my export and the domestic side.
And sir, I like your commentary on receivables are over 6 months. It's growing. From 20 crore to right now, I can see 37 crore. So what's the probability of getting that all back?
So we have also expanded our business, right? Our facilities earlier, which were operating at 15 to 18% of the capacity, it is being operated at 45 to 50% right now, right? So with the increasing business, you might see that hike in the trade receivables as well, right?
Okay, sir. Sir, one last question from my side. It's kind
Yes.
of selfish question. Where I can see Patel Retail 5 year down the line, like.
See, Patel Retail has always stood for a value-driven entity. We promise on delivering value for money, be it anywhere. Further, I cannot comment on the numbers. Um, yeah, but if you right, I mean, it's a value for money. We will be known for value for money with the growing. Yeah. With the growing market in tier two and tier three cities, a lot of potential is coming from tier two and tier three cities. It has been observed everywhere, right? That's why even everyone's trying to compete in tier two, tier three cities. We have the first movers advantage here, right? So that's always going to be there.
And right now, there is no plan to move from Maharashtra, na? Or your
No,
retail store
I
only.
mean, as a firm, we never say never. So we might go to other states as well because we have a very rigorous procedure for opening a store, right? So once we have identified a gap in a state as well and we see a lot of potential there, we certainly could expand our footprints in other states.
Thank you so much, sir. It's a pleasure to have you
Thank you
answering
so
all the
much,
questions.
Rahul.
Thank you so much, sir.
Thank you.
Thank you, sir. So we have next questions from Mr. Abhishek. Yes, Mr. Abhishek, you can go ahead and ask your question.
Thank you for the opportunity. Thank you, Rahulji, for answering all the questions. I just wanted to understand the margin profile of the three businesses separately. So one
Sure.
is the retail business, the other one is the export business, and the other one is the local domestic trading business or manufacturing business, right? So the margin profile, EBITDA margins for the three business.
Yes. Hitesh, can you please take this?
Yeah, so basically, EBITDA margin for my retail business is almost 6 to 7%, and the non-retail margin is almost 12%, 12 and 12.5%.
6 to 7% for the retail business, and the non-retail is 12%.
Yeah.
Non-retail, maybe can we bifurcate export versus local?
Yeah. So we have a healthy margins in exports. Exports we have a almost of 14% margin, EBITDA margin, and non other than domestic is 10%.
Understood. And sir, in terms of receivables, retail business में receivable तो I'm assuming will be zero, right? Uh,
Almost negligible. Yeah.
and export business will like be like 5 or 6 months, or how long like receivable cycle कितना है वहाँ पे?
Yeah, almost the shipment and the transit period takes around 3 to 4 months minimum. So the entire cycle gets into 4 to 5 months to get the realization.
Right. And what is the receivable period cycle for the trading business domestically in the domestic market?
It's it's
Uh,
uh, it's
Almost
usually
50
7 to
days, more
15
than 60.
days. 7 to
Yeah.
15 days. Domestic market in this way is quite organized as opposed to export market. Even that's why we took a cautious call that we need to get the rotation as well, right? So that's why even a guy before this asked us the question, right? That's why we shifted our focus and we filtered out export business as well.
And sir, in terms of the retail business, like we have a EBITDA margin of 6 to 7%. Is it possible to maybe bifurcate it between, let's say, new and old stores? For example, there will be a few mature stores where, let's say, the EBITDA margin will be more than 6 7%, and the newer ones, let's say, in the first 6 months, they would be maybe close to break even, etc. Right? So, I mean, what is the steady state margin for a proper mature store, and how long do we reach there?
Hitesh,
So,
go
yes,
on.
sir.
Go on,
The
Hitesh.
matured stores are providing the EBITDA margins of almost 8%, and the stores which are new, which have not reached to the break even, are providing around 5%.
So let's say in the first, let's say once we open a store, in the first 3 months, are we able to like reach 6-7% in the first 3 months, or we take more time?
Depends on the locality and the competition there, right? Depends on that.
Okay, so I mean just to understand the 6 to 7% journey, right? I think our COGS is generally 80%, right? So gross margin is around 20%.
Mhm.
What are the 13% cost? उसमें क्या क्या आता है sir? 13% में broadly, like
No,
very broadly.
Hitesh,
no,
you
I
can.
have got your questions. Please come back.
So 13 our EBITDA margin is 7%, right? And
Hmm.
gross margin is 20%, right?
Hmm.
So जो 13% cost है in between, like what is the broad bifurcation of that, let's say in terms of employee cost and in terms of rent, electricity, etc. क्या bifurcation है broadly?
So, more or less, the rent cost goes up to 50 to 60 lakhs monthly basis. So,
Mm-hmm.
on an average, 7 crore is my lease cost, and uh, employee cost just under 10 will provide.
तो जो ये एम्प्लॉई एंड रेंट है, ये
But
सारा सारा रिटेल के लिए है क्या?
no, no, it is a common.
अच्छा, आप ये कॉमन तरीके से
So,
डालते हो?
सर
अ,
अगर
अरे,
मैं रिटेल का आपको गिनती कराऊँ ना सर, सो योर रेंट इज आर रेंट ideally is 2 to 3%,
ओके,
and employee cost is less than 5%. Don't quote me, but it should be around 4.5. I can check and get back to you.
गॉट इट.
And this includes the cost of DC as well, right? The employees that are required for DC as well. So that it's not pure for operation of stores.
एंड सर बाकी 4-5% कॉस्ट क्या रहेगा फिर?
Other operation cost, administration cost, and all of those things.
गॉट इट, गॉट इट. इसके अंदर सारा ओवरहेड भी आ जाएगा ना बेसिकली, लाइक जो कंपनी लेवल का ओवरहेड है वो सब भी आ जाएगा इसमें, राइट? 4-5% में.
Yeah, yeah.
अंडरस्टूड. सर हमारी आगे के लिए स्ट्रैटेजी क्या है? लाइक वी हैव रेज्ड गुड अमाउंट ऑफ मनी फॉर वर्किंग कैपिटल पर्पस एंड आई थिंक वी हैव डिप्लॉयड अ लार्ज पार्ट ऑफ इट एज वेल.
Yes.
तो
To open more stores is our first priority. Our second priority is to optimize and automate our manufacturing plants to cater the needs of our domestic market. And thirdly is to introduce new SKUs, try to expand our SKUs, enter into more food categories. We have right now just started powder spices, but soon we want to do dehydration and frozen foods. We want to go into snack business. Uh, all of that in the lines of food. So right now you can say we have built a base for manufacturing, wherein anything required in order to make this value added goods is being produced by us in our manufacturing units. So soon we will be value adding to those products, right? Uh,
अंडरस्टूड. एंड सर इन टर्म्स ऑफ
yes.
नंबर्स, लेट्स से व्हाट सॉर्ट ऑफ अ ग्रोथ कैन वी एक्सपेक्ट, लेट्स से इन FY 26 एंड FY 27?
Anywhere between 12 to 15%. I cannot say that, but yeah.
Got it. I mean, given we'll be deploying a
15.
large amount of capital this year, do we expect like a bump up in growth versus the last, let's say, few years trajectory? I mean, can we have a, let's say, 40-50% growth in between? Uh,
As compared to
to,
last year, you would see a significant growth, but moving forward, you would even see more growth. We can easily compound to 15 to 20% of growth moving forward.
and margins will remain like in the current range itself, broadly, right?
We don't on planning. We don't on planning to have the same margins. We'll definitely work on higher margins. We want to increase our margins, right? That was the entire point of raising this kind of money.
Mm-hmm.
Uh, to optimize our entire processes and try to cut cost by adding automation and increasing the efficiency of our machineries and all of that.
Understood. So, sir, in terms of EBITDA margin, like we have in the past hovered between 7 to 8%. Like, what can we expect? Let's say FY26, H2 of FY26, and then FY27.
I it would be on the same lines. I cannot give you the numbers. Uh,
Sure.
It would
Sure.
be
Okay.
on the same lines of what I just told you, right? Of the growth scale.
So end scale मतलब
So,
maybe let's say we leave FY27, but end state margin कितना रहेगा हमारे हिसाब से? Can we let's say eventually let's say over next 2 3 years glide towards 10 to 12% margin?
yeah, we'll aim for it. We'll certainly aim for it.
Thank you. Thank you.
Thank you.
Thank you, sir. Sir, we have some questions in the chat box as well. Mr. Nikunj is asking, he has three questions. First one is, what is the breakup of grocery and non-grocery, like clothes, consumer appliances?
It is 75-25. 95-20.
Okay, thank you, sir. His second question is, what has been the impact of recent GST cuts on sales?
So we have a positive impact. Basically, the reduction in the GST rates have increased the potential demands, and we have seen the positive effect in our sales.
And to add on to that, we have always been value driven, right? So any price cut from the government side is always going to help us to help our consumers, right, to get goods a- at the right price. I wouldn't say cheaper, at the right price.
Okay, thank you, sir. His third question is, what, according to you, is the most competitive advantage of Patel Retail versus Reliance or DMart?
Our location, our basket design, our on ground understanding of consumers, our quality in the staples and groceries, which you wouldn't find at, I mean, I don't want to say the name, but you can check it first. Yeah, that.
Okay, thank you, sir. So the next question from someone is, what does value mean most for your customer today? Lower prices, better assortment, or convenience?
Value. I mean, it's not lower prices, it's not better assortment or convenience. Value is basically for us, कोई भी एक प्रोडक्ट का दाम I will I'm not gonna romanticize the word organic or anything that's in the market and just gain higher prices from it. For us, it's genuinely providing value to our consumers. For an example, let's say wheat, if I'm getting it from MP, right, the purest kind of the nicest quality of the wheat, right? I am just because I'm getting it, I'm not gonna keep high. I would not gonna keep high margins or just give it a different label and just try to steal my consumers, which eventually consumers is going to know. Because consumer awareness is increasing, right? So for us, value is basically giving whatever time or money they're spending with us, we try to give them the best experience, best service at the best price. At least we try to give them that.
Okay, thank you, sir. So next question we have is, any plans of launching your private labels on quick com apps? And can you please repeat, what's your plan to compete with the quick com players? Hello, sir.
I mean, yes, we launching our private labels on platforms. And my plan to compete with those quick com players, I don't think I'm competing. I mean, I'm competing in one omni channel that's there. But when if we talk about consumer convenience, I am also providing them convenience by giving them free home delivery and the convenience of shopping. It's just that the time span, right? And moving forward, uh, consumer are soon will realize that they are spending extra bucks on these apps. So we will try to be consistent with the value and our prices that we are trying to give to our consumers. We'll be launching our own quick commerce app where they will be experiencing the same value. Yeah.
Thank you, sir. So we have next question from Mr. Churchit. His first question is, our cash conversion cycle is 100 days, while the players like DMart has just 30 odd days. Are we following any different strategy?
Mr. Hitesh, can you please answer?
So, unlike demand, we have an export business and the domestic business too. So, in our retail segment, the cash conversion cycle, our cash conversion cycle, is a 10 to 15 days only. Whereas because of the exports receivables, the realization cycle goes at the upper side.
Okay, thank you, sir. And continuation to that, and going forward, what kind of cash conversion cycle can we expect?
So we can expect lower cash conversion cycle, and we are already working on the strategies to minimize the collection period from our trade receivables or export segments.
Thank you, sir. His second question is, can you give revenue contribution segment wise?
Sure. The retail segment contributes almost 37 to 40%, and the domestic segment contributes almost 40 to 43%, and export is 20 to 25%.
Thank you, sir. Participants, I want to remind you, if you have any questions, you can raise your hand or you can drop your questions in the chat box. Yes, Mr. Churchit, you can go ahead and ask your question. Mr. Churchit?
Churchill, you are on mute, I believe.
Hi, am I audible now?
Yes.
Yeah, you are.
So just one thing, like, are we able to provide the goods like at the same price at the power of DMart, like, or there is differences?
Um, um, Most of them, yes. Also, DMart has different SKUs which are specially made for DMart. Let's say you wouldn't find a 950 grams SKU in our store for some products. When it's if you compare Apple to Apple, more or less, yes.
And like, what is the contribution of a private label in the total sales?
17%, 17%.
I think that might be having a higher margins, right? So can you just quantify it?
Yeah.
Yes.
So we have 100 CR, almost the contribution in the total sales of H1 sales.
And like going forward, are we, planning to do the same percentage contribution?
No, we plan on increasing. We have strategized right now to increase our sales from 17 to 22%. I mean, soon till on medium term, like
Like just one quick question on this only. Like, what kind of margins do we have on this
on
on private labels?
anywhere between Hitesh, do you have a concrete number?
Uh, so if margins in the sense you want to ask EBITDA on the private label.
Correct.
So the EBITDA percent on the private label goes up to 12%.
12%. Great. And we are selling private label for the retails or like domestic export and also like just in which segment?
So our private label Indian Chaska, we sell it domestically inside our stores, also export.
Great. And
Uh,
other two?
Besides that, Patel Fresh, there is only one SKU, which is our atta, that's been exported, and other products are not. And the rest, Patel Essentials and Blue Nation, is purely for our stores only.
Great, great. Okay, sir.
Yeah,
Thanks a lot.
thank you.
Thank you, sir. Yes, Mr. Abhishek, you can go ahead with your questions.
Sir, I just wanted to understand the inventory bit as well. Typically, in the store, how many days of inventory do we have?
So
One,
we maintain 3 months sales as an higher side of inventory at our retail stores.
3 months of sales of inventory. Isn't it pretty high given like majority of our business comes from food and related products?
no,
The perishability.
it,
Huh?
it it varies from season to season. Let's say if it is a festival season, then you would find 2 months of inventory because we don't want any last minute delays from our brands, right? I mean, let's say Everest or Haldiram, they wouldn't. They're pretty tight on their own schedule as well, right? So during festive season, you would see a higher inventory days, while as during regular. It's typically 1.5 months, and
Got,
and this is including both in store as well as DC, right? So it's just not in store.
got it. And
Yeah.
sir, कोई seasonality भी रहता है क्या हमारे business में like any particular quarter which is steep or any particular quarter which is weak?
सीजनैलिटी एज सच नहीं होता है सर। अगर लोग घर पे बैठ रहे हैं तो धंधा होगा, अगर लोग छुट्टी पे जा रहे हैं, घर पे खाना नहीं बन रहा है तो धंधा नहीं होगा। इज दैट काइंड ऑफ थिंग।
Got it.
या
And sir, following on the last participant's question, where you mentioned that private label share will you strategizing to increase from 18% to 22%.
या
So, how are we sort of trying to do that? Like, what are the different things we're doing to
Uh,
achieve
so,
that?
we are going to increase our distributions when it comes to Indian Chaska, and when it comes to other label, we'll just try to increase SKUs with higher margin, less competition, and introduce exclusive offers for our own brand as compared to other competitors.
So
Giving it
while we do that, I mean,
so there are
what
multiple
I'm trying,
factors. Sorry.
what I'm trying to understand is ki, would we be sort of resorting to maybe discounting or something, and can that maybe lower your margin there, or your margins of 12% in private label be maintained?
Sorry. Can you please
I
say
mean,
that?
while you promote your private labels, you will still be able to maintain your 12% margins in your private label business, or you would want to maybe like go slightly lower there.
I mean, while we are trying to gain the traction, you would see a percent or two more or less. But ideally, once it is stable, once we get that kind of reputation, once
Mm-hmm.
the consumer is sold on the quality
Mm-hmm.
and the taste of the product, we would see stagnant, if not more.
Got it. Got it.
Yeah.
Thank you.
Thank you.
Thank you, sir. So we have one question in the chat box from Mr.
Yes.
Dinesh Kumar Patel. He's asking, yours is an interesting business model. His question is, going forward, are we going to have more own stores with rented one? What is strategy?
I mean, regardless of what the situation is, we need to think about our P&L first. So whatever falls within our strategy of the store rent or per se, our buying a store and trying and calculating the ROI on that particular asset, uh, we can take call on that, right? I mean, I cannot say what my strategy is. My strategy is simple, to keep my P&L and balance sheet healthy.
Thank you, sir.
Yes.
Sir, I think we have covered most of the questions.
Yes.
If there are no more further questions, can we conclude the meeting? Hello, sir. Am I audible?
Yes, you are.
So I think, sir, we have covered most of the questions. So if there are no more further questions, can we conclude the session?
Sure.
Okay. Thank you, sir. Thank you, everyone, for your time and participation. If there are further questions, you can reach out to us at corporateaccess@kirinadvisors.com.
Yes. Thank you. Thank you so
Thank
much.
you.
Thank you, Praneeth. Thank you, Kiran. Thank you,
Thank
Ronak.
you. Thank you,
Thank
sir.
you,
Thank you,
Vishesh.
sir.
Have a good day.